All right, now to our first conversation. We see the political instability in Rivers State has become a significant concern, potentially affecting investor sentiment and the broader Nigerian equities market and other parts of the economy. As tensions rise within the state, investors are likely to reassess the risk environment, which could lead to shifts in market behavior. Political uncertainties, including changes in leadership, policy direction and security concerns, have the potential to influence both domestic and foreign investment flows into any region and Nigeria as a whole. This discussion will explore how the evolving political situation in Rivers State may impact market confidence and the performance of the Nigerian economy in 2025. Well, let's see perceptions at this point. Joining us to unpack this, we have Mr. Olatunde Amolegbe, the MD/CEO at the Stephen Asset Management, joining me right here. It's great to have you.
Thank you. Thanks for having me, Lady.
Yes.
Good morning.
So, definitely quite the headline screamer, yesterday with the state of emergency declared in Rivers. And we know how crucial that state is, for oil production in Nigeria. So, definitely, when things like these happen, someone's trying to make an investment decision somewhere that might be flowing or supposed to flow into that state, already have investment there. But issues like this definitely sway perception. What are you seeing?
Investment is all about information.
Right.
The pricing of assets, pricing of any investment whatsoever, takes cognizance of what is happening now and what is likely to happen in the future. And, so people pay attention to whatever it is that is going on in the news at any particular point in time. That we've gotten to the point where, what has happened in Rivers State has had to happen will be read in its various forms and permutations in boardrooms and in positions where investment decision making needs to be made this morning. So what I will say is that, it is what it is. We are where we are. We need to just ensure, I'm talking as a country now, we need to ensure that we are managing the information that is going out there in a careful manner, so that the key decision makers, particularly those ones bringing in investment from outside, all right, see these moves that have happened as efforts to stabilize a very, very crucial state and a very, very crucial region of the country. As I've mentioned, lots of oil assets, lots of oil facilities is out there, and a lot of the investments coming into this country is coming into that sector. So, so it is important that those people making those decisions see this as an effort to ensure that stability and security returns to that region, and that their existing investments and the ones they are proposing bringing in is safe enough for them to be comfortable that it's still okay for them to come into Nigeria and particularly to invest in that region of the country.
Right. And looking at the situation right now, what do you think could be some kind of boost, for foreign investor, sentiments? Because we are where we are right now in that situation as it is. But what do you think could calm nerves, right now?
So for me, as a finance person, I tend to sort of put myself in the shoes of a foreign investor or an investor of any kind, even local, that is looking to invest in a country. And obviously, I'm listening to news coming from the region I'm looking to invest in. And if those news, skew in a particular direction, I need to be sure that that direction is such that I'm comfortable with. So my advice at this point is that, obviously, luckily for us, our political leaders realize the importance of foreign investment coming into the country. They know the value it adds to the economy. They know the potential for job creation and other benefits. So they've made an effort to try and attract these foreign investments. It is important now that as much as possible that those foreign investors we are making appeals to do not see the news coming out of this country being focused so much on issues around politics, issues around insecurity and the like. I mean, they are happening, but as much as possible, you could also affect narratives. So I will implore our leaders to find a way of shifting the narratives towards focus on the economy, towards focus on poverty alleviation, job creation, and the likes. Because I mean, those are the sort of narratives that investors are comfortable with. They want to be sure that the leaders are focused on growing the economy and strengthening, our position as an economic power. But if what they are hearing on a continuous basis is about politics and the likes, it is likely that they are going to be skittish.
Right.
Even as a local investor, you are likely to be skittish.
Right, because we know how investors react, in most markets. Once it's bad news, they're unforgiving.
Absolutely.
They will sell off
immediately
and run to safety. And, that's a loss of value there for that asset class. But looking at, some of the, vandalism news, coming from major pipelines, I hear that's, been fixed so far. Are you seeing any risk for oil and gas stocks listed in the market?
There will most likely be short-term reactions because obviously, you see instant reactions. But typically what you also see is that if the news we are getting back is that, okay, look, that's the sort of damage we are envisaging is not as much, and that the situation has been brought under control, then you might see some clawing back. But clearly there will be some initial reaction. Medium to long term, people want to see what is being done to ensure that such a situation does not repeat itself and that it does not become a contagion where you are now hearing news of such coming out on a regular basis. That could do significant damage. So you want to ensure that the reaction we see does not go beyond the short-term reaction, which is inevitable. It will happen. Medium to long term is for me more important. So we just have to ensure that we keep the lead on it,
right,
and ensure that the news coming out of that
that's a major forex earner for us, oil exports at this time. And we already see that impact because we saw weakness, for the Naira. And definitely if we're not getting that FX the way we should and, ramping up production, negative for the Naira. We've been enjoying stability, with the Naira so far.
Our economy is anchored on the oil and gas sector. That is just the truth. Is the largest foreign exchange earner, all right, for this country, and it's probably going to be like that for a while. So protecting that is like you have a golden egg. You want to do everything you can to ensure you protect it as much as possible. So protecting it is just sacrosanct. We do not have a choice. So as I mentioned, we will see short-term reaction. And we just have to ensure that, it doesn't become a contagion and, the implication on the financial market and on the economy itself will be significant if this goes beyond, the initial news we've gotten. And, thanks to God that we hear that at least there's some control, being exerted in that area now.
And it's quite interesting looking at the first quarter of 2025, so far, and coming from the global economy to the tariff wars, seeing what's playing out in Nigeria, right now when you're talking about political instability in that state, and most of the announcements we get from the U.S. At this point, geopolitics, still a big risk at this point. So it's almost seeming like 2025, is it the year to stay away from risk assets? Because now we're seeing gold, that's hit over $3,000 and seems to be inching more, getting more comfortable in that $3,000 range. What are you seeing?
The fact is that there's lots of turmoil happening on both globally and, of course, as we see now, locally. and the market will react to this news. And you are probably right that any investor wants to be a little bit cautious and actually try to see the light at the end of the tunnel before taking a risk at this point. But I still think that at the end of the day, all of this will settle. I think a lot of what is happening, at least globally, appears to me to be a lot of realignment, realignment of interest, realignment of political focus. I think that ultimately we are going to see a settling. We are seeing the market react to those developments, which is expected. But again, as investors, what you are going to see is a situation where while some says, okay, you know what, let me press the brake and take it easy, others will most likely see it as an opportunity to go in at the deep, and with the hope that things settle and they are able to make good returns. So there's never only one single situation for every investor. So it depends on where you sit in the risk spectrum. So if you're a risk-averse person, all these uncertainties can't possibly make you comfortable. But if you're a risk lover, it could very well be that this is sort of situation you want to take advantage of.
Talking about risk and looking at the local bourse so far, Q1, year to date, still positive. That's for the all-share index. But the month of March, it's been quite bearish, so far. I think it's down over about 2% for the month. Is that just regular profit taking, or is it some kind of bear market trying to brew?
I think it's a bit of a whole host of factors. Some of the issues we've mentioned about global uncertainties and all of that probably has something to do with it, because I will assume that since the beginning of March, with all the uncertainties in the US and the global markets, it's very likely that we've probably not seen as much entry from FPIs as we've seen possibly in the last few months. All right, so that could have impacted the dropping of the ASI as we've seen. Of course, local issues such as the one we've discussed there could also have something to do with it. The performance of the companies themselves, that we've seen, could also be impacting the performance for the month of March. But on average, if you look at it, the fact is that it appears the NGX is holding its own. If you compare it to peer markets, both in Africa and globally, the truth is that most global markets are already showing negative. Most of them are either in correction range at this point, or
like what we've seen with most of the indexes in the US.
In the US, yes. So
correction. But now is a bear market.
We are headed towards a bear market in the US. So, and typically the way the US market goes tend to go most other markets, because significant correlation and a significant link among this global market. So so it's not surprising, but at the same time, I think the positive we can take from it is that at least we're still holding our own, and we're still in the
because
positive range.
I guess in some cases we've seen where a correction doesn't necessarily lead to a bear market.
Absolutely.
You have the correction, then you have some kind of recovery, then the bullish market continues. Could that be the case for Nigeria?
I think largely this is what I see, because if you look at it on a sector by sector basis, you will find out that maybe just a few sectors, maybe about 2 sectors, are actually the ones dragging the market down. So broadly, the other sector seems to be holding firm. So if we are not seeing an across the market correction, then the chances that we are going to slip into a bear market is probably minimized. So we'll see. The market will do what it will do. There will be upswings and then corrections. So I think that there's really no cause to panic for now.
Right. And, talking about panic, looking at some of the consumer goods stocks, listed, we're seeing the latest one for PZ Cousins. They had that vote, recently. They're trying to convert the loan from the parent company into equity, and that was voted against. How are you seeing that, what's playing out, with shareholders and minority shareholders?
Yes, I saw that news, and for me, there are two main reasons why minority shareholders will vote down such an effort to convert debt to equities. It's either they are dissatisfied with the conversion pricing, or they are dissatisfied with the dilution they are likely to face. In the case of PZ, it will appear to me that it's a combination of the two. But if you also look at it from the other side, if the majority shareholder or management is saying that when things were very tough, the foreign shareholders have had to lend $40 million or thereabouts to the local subsidiary in order to sustain its operation, because we know 2002, 2003, we know the conditions of the foreign exchange market. So it's very possible that at that time the local subsidiary was struggling to be able to get FX to continue to run its operations, and that is what led to the internal borrowing that accumulated into that debt of $40 million that they are now trying to convert to debt. So on the face of it, you will think that the international body is trying to essentially do a favor to the local subsidiary by actually agreeing to convert those debts to equities, because not converting them means that you are going to be having costs to continue to pay both interest and principal. And we know the exchange rate. You know what has happened with exchange rate. We've seen the result of PZ. You saw the significant devaluation losses they've been carrying. And except this debt to equity happens, it's likely that they will be carrying that revaluation loss for a while. And the valuation loss essentially have wiped out the shareholders' fund, if you will. But at the same time, you cannot also expect that the minority shareholders just accept conditions that could, dilute their values significantly. So
everyone's looking out for themselves.
Absolutely. So the two parties just need to find a way of sitting down and reaching an amicable agreement that works for both parties.
Right.
But on the side of the borrower, I think they are being magnanimous by agreeing to convert to equities. On the side of the minority shareholders, they are also just trying to get the best deal for themselves. So they need to sit down and sort it out.
And this is still on the back of FX losses. And, definitely, I'm sure when subsidy is gone, was announced, and collapsing of most of our foreign exchange markets, I still wonder if we saw this coming, for most of these companies, because it's been FX losses, ever since then. But now we're seeing stability, with the Naira. Do you think we're getting to a point where FX losses, big FX losses for these companies might become a thing of the past, or is there still risk?
I think that for those that are proactive and that are committed, if you will, to the country, some of them have taken some actions that has probably helped them to escape this issue of FX losses. I'll give an example of a Unilever, for instance. I think a lot of the backward integration they've done in the past had meant that they had not relied too much, if you will, on the need for FX to import raw materials and the likes, which means that they are not having to struggle too much with the issues of revaluation losses. So what I will expect some of the companies that are still committed to operate here to do is to gradually find a way of also increasing the local content of their products in terms of raw materials, in terms of operational cost and the likes. You know, so the more you do that, the more you do not need to rely on FX, then you could get away from the issues of FX losses with time. So it's really it needs to change strategy. So if that is done, then down the line, yes, we could. Some of these companies could, avoid the need to make provision for FX
because
losses.
I can imagine how much of a nightmare,
yes.
FX losses are for most of these companies, and developing that hedge, definitely another headache.
Yeah.
Having to think of ways to hedge against such things. But still early days. I guess 2025 we'll see. Hopefully, the Naira continues staying stable, and maybe we'll see FX gains.
Yeah.
At some point.
At some point.
At some point. Thank you so much, Mr. Olatunde Amolegbe, as the MD CEO after Stephen Asset Management. Thank you for coming on today.
My pleasure, lady. Thanks for coming.
All right, we'll take a break now. When we come back, other matters now. We'll look at Nigeria's banking industry and tech expectations. That's in a moment. Just stay with us.